This is the Lulich Corner. I'm Jordan Lulich, and today I get the pleasure to sit down with Theo Perry from Cypress Bank Trust. And as you guys know, and as you've been watching, the Lulich Corner, the purpose of our podcast is to bring in different business leaders, community leaders, and to talk about different things that are related to our law firm and our practice, as well as our community. And today we get to hear from Theo. So Theo, thank you so much for coming in. Thank you for joining us. And I'd love to start out the podcast just with a simple introduction. So if you could tell people a little bit about yourself and where you're from and what you do.
Yeah. Theo Perry, born and raised in Vero Beach. Been here for my entire life. Currently a portfolio manager for Cypress Bank Trust. Cypress Bank Trust has been in Vero for about 15-ish years. We were just a trust company until 2021 when the trust company formed a bank inside the trust company, which is a very atypical way to get there, but led us the opportunity to grow a sort of private bank feel inside a trust company, which has been pretty beneficial. We've got an office over on A1A that's been there since about 2009, and it became a bank branch in 2023.
I may be a little bit biased, but when I think about people that I want to work with, whether it be banking, real estate, portfolio managers, whatever the industry it is, I always look for someone local because you cannot put a price on being able to go into Publix or go into Walmart or go into a store and run into someone that you're working with locally.
Sure.
You can't put a price on that. I can't tell you the times that I've worked with people that were not local and we had an issue and weren't we able to reach them and we weren't able to contact them and get a hold of them. And the issue lingered on. Whereas when you work with people locally, there's a greater sense of accountability because you're able to go to that person's office and you're able to talk to them and resolve an issue. Not saying that there's going to be issues working with you, Theo, but in general, you're able to hold them accountable. And I think as us locals, I think that there's a heightened level of responsibility for people that we work with locally because we know we're going to see people out and about. We know we're going to see people in public. And so we want to do the best job we can. And so I'm pro-local. I'm sure growing up here, you must feel
absolutely.
The same way too.
No, I've been working for local community banks my entire career, and my wife and I have a running gag about how many people will know when we walk into our local Publix. And it's like, is it going to be plus or minus 5 today?
Yeah.
And was over there over Christmas, ran into like 14 people I knew in one trip. And I was like, this is abnormal. But I guess everyone and their mother needed canned corn for Christmas that day. And it just piles up.
Yep, that's the joy of living in a small town.
Yeah, absolutely. It's always nice to work with people you know and see in the community, and there is that level of accountability, but as long as you're staying above board and everything you're doing is kosher and all agreeable, it's nice running into these people and getting those touches.
Absolutely.
Rarely do I go out and get like cursed out by someone who's running into me at Publix. Actually, it's never happened.
I say this because like in the last 5 years, we've just been in an era of COVID and social distancing and the ability to work face to face with people. I think it's we're going back to that, and we haven't had it for a while, but it's nice to see society kind of reshaping what's normal and going back to that face to face interactions. People are going back to work in the offices, and it's when you work with someone local, you've got that added benefit of being able to work face to face with them. And so I know in your prior role, you were a commercial lender. Right. And so you were a commercial real estate lender, and a large part of being a commercial real estate lender is, you're looking at data, you're analyzing numbers, you're analyzing, the profit that a property might generate, what's the appraised value, you're seeing if you're able to underwrite the loan, right? And so that's largely analytical. Now as a portfolio manager, that's probably not too different from what you're doing right now.
No,
different, maybe same skill set, but you're just analyzing different numbers, right?
Sure. Pivoted kind of from analyzing individual properties and individual companies locally to evaluating larger company. I mean, you're just adding zeros to the balance sheet, ensuring the profitability matrices that the guidance put out by those companies is lining up with what they're actually performing at, and ensuring that those investments are suitable for our clients and suitable for the goals that the clients are putting forward for us.
You nerd talked right there.
Oh, sorry. Yeah.
So let's boil that back. So what is a portfolio manager in very simple terms?
In the simplest way, either for trust assets or for personal assets, I'm the person who's touching the portfolio the most. You come to Cypress and you say, here's $100,000. We want you to manage this for us. We will build a portfolio working with the customer. Every portfolio that Cypress manages is individually built for that person. We're sitting down and we're having a conversation about what you're comfortable with, what your needs are, what your return expectations are, and we're crafting the portfolio to meet that expectation. Whether that's picking individual stocks, individual bonds, baskets of both, we're building that to fit what you need it to do. We've got a robust list that we are focusing on regularly and selecting securities from that list to populate your portfolio. I don't know how much more vanilla I can make that.
No, I think that broke it down in simple terms. So when you start talking about investments, because right now we're talking about investments, and a large part, when we sit down with people, we always talk to them about, long-term thinking. We talk to them about their legacy, who they want to leave their legacy to, what they're doing to invest their legacy, how are they maximizing returns on their legacy. But every good estate plan, every good investment plan starts out from a philosophical approach.
Sure.
I've always been one that looks at things long-term. And when you're thinking about investments and when you're thinking about the ups and downs, we're in a the financial markets are very volatile, right?
Yeah.
You can go up 25% one year. It could be flat the next year. It could drop 10% the next year.
Yeah.
And, it's interesting to see when people experience these ups and downs and when they experience these volatile moments, their first inclination is to sell, to liquidate, sell, to get out, to stop investing because it's too emotional, it's too painful. They feel like they're losing all their money. And so when you sit down with a client, Theo, understanding how markets act, what type of philosophical approach, what type of value approach do you take, in investing in your clients' assets?
So one of the first meetings I have with any customer I'm sitting down with, actually, we have this conversation as their prospective client. Kind of, what is your risk tolerance? If the market's dropping 10% this week, are we selling everything? Or are we adding more? Or are we riding this out? Is one of the questions that we kind of try and touch on, because it's important for me to have an understanding of what your expectations in that situation are. Because my inclination when the market's down 10% is put in more cash. But if you're not comfortable with that, ultimately it's your account. We're managing it for you, for your benefit. We kind of sit as the buffer that says like, hey, I know it's down a lot, but you said right here that if it's down 10%, you don't want to sell everything. You want to hold steady and keep and ride it out and see where it's going. Ultimately, the securities that we're picking aren't penny stocks. We're not buying Bitcoin. We're staying away from the most volatile segments of the economy, unless we want to take a small chunk of it and put it into there with client direction. For the most part, we're picking good long-term companies. For example, Apple's down somewhere close to 7% in the last 10 days. I have no expectation of Apple going to zero. I'm not liquidating any of my clients' Apple positions. We're probably going to continue to add to Apple as we see this as a buying opportunity for Apple in general. That doesn't mean that that's investment advice and you take it or leave it or don't do anything with it. I haven't seen your portfolio. But,
right, yeah. And none of this is investment advice. We're just talking general principles. But when you look at like the financial markets and you say, wow, this S&P 500 was up 20+% last year, 20+% 2023. I mean, we've had some massive returns. I think that there's a general level of skepticism for the financial markets with how well they've been performing, that something bad has to happen, right? And you look at the news outlets and you look at all these different forecasts that they put out, and there is, I think, a wave of negative outlooks on the financial markets. And so how do you confront those types of trend and that type of news when you've got a positive trend and,
Sure.
and investments are doing really well. And then on the other hand, because it's been very positive, you've got news outlets, portraying and communicating negative information to the public. I mean, how do you take that into consideration in weighing that in as a factor in an investment plan?
It's all about the individual client's risk tolerance.
Yeah.
And we're constantly weighing what they're comfortable with where we think we should be. And every portfolio, I mean, I have lots of portfolios and none of them are identical. Everyone is built for what the customer has indicated to us. Like, I manage an account for a guy who used to own an oil company. Mm-hmm. We have oversized exposure into oil and gas because he's comfortable in oil and gas. I wouldn't build your portfolio to be overweight in oil and gas, but he, sitting down in that first meeting, hey, I know that these are volatile, especially with where we're going in the economy, but I feel more comfortable in these in the long term. So we've got a overexposure into that space.
But he knows the space. So how do you deal with liquidity, right? Sure. Liquidity when someone's cash rich, when someone's got a lot of cash in an account, is that something that you want your clients to have in thinking about their investment plan and investment strategy, or do you typically advise for? And I know it's, again, like everything's going to be a case by case scenario.
We run into a broad situation there. Two things I can share on this. Usually 5 to 10% cash is where we're sitting right now in accounts. But cash isn't nothing. Right now, any cash that you have invested with us is invested into a money market account, and it's paying about 4.3% today. So 4.3% isn't zero. There's less opportunity cost on being in cash than there has been in the last 10-ish years. When interest rates were zero, sitting in cash was essentially you're being penalized for sitting in cash. The markets are performing and you're not earning anything on this money. We're not exactly in that situation now. One thing that we've been doing for clients specifically at Cypress Bank Trust, we're a full functioning bank and we're an investment arm. So we've been able to take some of our bank customers that are running large reserve accounts. If you've got $200,000-$300,000 that sits in free liquidity regularly and you touch it maybe 1 or 2 times a year, there's no reason that needs to be sitting in a bank account earning 1 or 2%. We can take it and put it into a treasury ladder that'll earn you 4.5%. And now you take that excess liquidity and you've got yourself enough to buy a new truck at the end of 2 or 3 years. It's easy to do and easy to manage that way. And it's been a large selling point for bringing people over to Cypress the bank and Cypress the investment company.
Right. Because you guys are kind of a 2-in-1. You've got the deposits and then you've got also the investment arm of
it takes close to about 3 days to go from liquidity in the investment account to cash in your pocket again, if you need it that direction.
So kind of segueing a little bit. So 2025, I read an article and it was talking about the 9 predictions for 2025. I thought 2 of the predictions were interesting. The first prediction was AI, and it was talking about in 2025 the utility, the use, the everyday aspect of AI is going to be more prevalent. It's going to be more present. We're going to see AI more and more and more. So I'm curious from you, Theo, considering that one of the predictions for 2025 is more AI and AI is just getting started, how does that sit, as far as an investment strategy for you, and what you're considering, is that something that's, on your hot sheet, so to speak?
AI was one of the largest drivers of the stock market in 2024 in general. You look at the companies that performed the best, most of them had some AI component to them. Companies like NVIDIA shot up because they generate the chips that are needed to run the data centers that are running the AI models. So AI essentially was already a huge theme in 2024. We're expecting it to continue that way. You're going to see more transparent ways that you're interacting with AI in the future. So if you pull out your phone and you Google, where should I get lunch today? That's probably a bad example, but what's the equal weight S&P 500 up this week? The answer that's up at the top is going to be an AI generated answer. AI went out, found an article that knew the answer to that, and then put it in a consumable way. Mm-hmm. So Google's already using AI for stuff like that. Salesforce is a large CRM company. They are using AI to help with client retention, client management. They even have a way that you can use Salesforce to essentially reach out to your clients automated. They'll never know that they're talking to AI, but they're sending out communications that way. There's companies like Axon Enterprises that uses AI to generate police reports based on dash cam footage. So it's out there and it's prevalent already.
Yeah.
I expect it to continue to be a large part of what's driving the economy forward. Definitely a big play. The next play in that kind of segment is going to be quantum computing. Google came out a few weeks ago and said that they had just unlocked their first AI chip, or their quantum computing chip called Willow, which not really commercially viable yet, but was a huge driver for Google's performance in the last few weeks.
As we're wrapping up, Theo, I'd love for you to share your contact information.
Sure.
But as you share your contact information, who's the right person to reach out to you?
Yeah. Anyone that owns a business or has excess liquidity that they want put to work and managed, happy to sit down with anyone that kind of even has remote interest in investing, and happy to talk to them about what we can offer. Cypress is a little bit different than most registered investment advisors, that we are a trust company, so we operate 100% as a fiduciary. Every person that we manage gets a team around them. They get a banker, an investment officer, and a trust officer to help them through all of the landscapes that they need in those situations. As far as contacting me, cypressbanktrust.com is the website. It's got all our contact information for all of our 7 locations in the state of Florida. And then my email personally is theo.perry@cypressbanktrust.com, and happy to connect with anyone who has questions.
All right. Well, appreciate you joining us. Thanks for listening in. And this is the Lulich Corner, and we'll see you next time.